Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. And we're really going to be focusing on cryptocurrency and what is happening in these cryptocurrency streets. And since I've been talking about this, one of the questions that I get a lot is, how does the IRS even know that I'm dealing in cryptocurrency? And especially because the draw for cryptocurrency was this anonymity, right? But that's not exactly true. So I'm going to talk about how the IRS actually knows that you have cryptocurrency transactions. Number one is subpoenas or Doe Summonses, okay? So this really hit the crypto industry back in 2017 when the IRS won its case against Coinbase. Now, what the Doe Summons is, the government is saying, we know what the public keys are. You, platform, have the private keys. You need to tell us who they belong to. And so that's what the Doe Summons is. And if you remember, after that, and I want to say 2018, 2019, the IRS started sending letters out to crypto customers saying, hey, we know that you have had some cryptocurrency transactions. Here's a reminder of what your reporting requirements are. That was the beginning. Then they sent out the letters 6173, 6174, 6174A. And those letters were pretty much more direct in saying, hey, you need to be filing and claiming your cryptocurrency transactions, right? And so that's how the IRS knows. Now, also in 2021, I want to say it happened in 2021, after COVID, the dates start to run together, right? So, but what has happened is the IRS has also gotten the ability to send summonses to platforms Kraken and Circle. So Coinbase was just the beginning. Kraken and Circle are next, and if there are any other platforms, the IRS will be going after those too. And remember, one of the things with the whole cryptocurrency blow up when the IRS got access is they start with the big fish. They were looking for criminal activity. I remember seeing a case where a lady in New Jersey was arrested because she was funding terrorism using cryptocurrency. There was also several other cases of money laundering. So there was some criminal stuff that was going on in the cryptocurrency world, and that's where the IRS started. But I always tell you, that's where they start, but not where they stay. And so now the IRS has gotten to the point where they're trying to make up this tax gap between taxes that are owed and taxes that are actually paid. And one of these places is cryptocurrency, and they're looking for people who have not claimed their cryptocurrency transactions. And that's what the summonses are all about, is they're finding out who you are, and then they're coming to look for this money. That's what it boils down to. Number two is 1099 reporting. Now, with all of this, the different platforms were issuing 1099Ks, right? Now, the problem with the 1099Ks is usually that's for a third-party payer like Stripe or PayPal or something like that. And there's a business that's generally associated with that. But that's not the case for cryptocurrency. So even though there was a 1099K reporting requirement, and that even with the new legislation that's coming about, there's still even questions about that, right? Like, who's going to actually be required to do this 1099 reporting, because that's going to get pretty ugly. And it's really about the know your customer requirement, the KYC, and that's going to be requiring more people to collect social security numbers, and so that these people can be identified. So the 1099K reporting. So the 1099K gets sent to the government and a copy gets sent to you. And then there's that computer matching. So if you have not reported the income that's listed on that 1099K, the government is going to be coming for you. And it might not be this year. It might not be next year. It might actually take them about 3 years to get to you. But if it doesn't match, they're going to be coming for you. It's just that simple. So the second way is that 1099-K reporting. Number 3 is your 1040. The government has, and the IRS has actually moved the cryptocurrency question that, did you buy, sell, trade, collect cryptocurrency in any way during the year. That's going to be on the first page. It used to be on the Schedule 1. Now it's on the first page. Now, some of you may think, okay, well, I'll just say no. Even though the question may apply, you just say no. But here's what you have to understand. When you sign your tax return, you sign under penalty of perjury, which is a felony, that everything on the return is true and correct. And so if you knowingly say, no, I have not traded cryptocurrency, I have not sold cryptocurrency. If you say no and that actually happened, now that is fraud. And so now it just goes from an underreporting thing to fraud, which is criminal. Okay, underreporting can be accidental. Honestly, it can be, because you could have some job that you forgot, or you may do some affiliate marketing, get a 1099 from somewhere for some, and you forget that really does happen. And so that 1 or 2 times can be explained away with accidents. But when you deliberately say, okay, no, I did not sell any cryptocurrency or trade any cryptocurrency, that's fraud. That is intentional and willful. That's what makes it criminal. And number 4 is my favorite, whistleblowers. Now, whistleblowers basically rat people out to the government. They go to the government and they say, hey, Lysandra has been hiding cryptocurrency. Here's the information that I have that says she's hiding cryptocurrency. And so then if the government feels it's credible, they go and investigate, and the whistleblower essentially gets a commission based off whatever the government collects. So people will turn you into the government for not reporting properly on your taxes, and they will get paid for it. And if you follow the SEC, you will see that there are people that make millions of dollars in whistleblower activity. All right. So those are the main 4 ways that the government is going to know about your cryptocurrency. If you have not been reporting your cryptocurrency, I highly suggest you change that activity. One of the things that someone else to me, was screaming to me, you need to use DeFi, right? That decentralized finance. And there's no anti-money laundering, or there's requirements, or know your customer requirements. That's not exactly true. And there is that type of tracking that's in DeFi. So it's not like, nobody's going to know who you are. And that is, I guess one of the things that people have a hard time really understanding, that the government may not know who you are today, but that doesn't mean that they're not going to find out who you are. That's the point I'm trying to make. So if you have not been reporting your cryptocurrency, or if you have, listen, the government is going to be auditing these returns. All right. And so I put together a crypto audit survival checklist. You can go to cryptoaudithelp.com to grab your checklist. It's going to give you the information that you need, to know the history of what's been going on with the government and cryptocurrency, and tell you what you need to know if you do get audited. Because listen, no one can tell you if you're going to get audited or not. It's not our decision. That is the government's decision. What we can tell you is how to be ready in the event that you are audited. Okay, that's what's important there. All right. So I hope this helps you out. Thank you so much for tuning into Home Biz Tax Talk, and I will see you all next time. Bye.